Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money mambo jumbo. Today we're diving into a filing from Blue Chip Capital Group Incorporated, and let's just say it has got some interesting numbers, especially when it comes to how they're doling out their stock. We'll be looking at some unregistered sales of equity securities, and you might be surprised by what we find. Before we jump in, if you love getting these insights straight from the source, make sure you're subscribed. And if you want to chat more about these filings with fellow finance fans, we've got a Discord community linked in the description below. Alright, so we're re-looking at a Form 8K, which is basically a report for big events that a company has to tell the public about right away. Think of it as a company urgent bulletin board. This report is being filed because of rules that say companies have to keep investors in the loop. It's like the rulebook for how they have to share important news. The earliest date mentioned in this report is the 10th of September 2025, which gives us a time frame for the events they're re-reporting on. The company we're looking at is Blue Chip Capital Group Incorporated. They are incorporated in Nevada. This is their commission file number, a sort of identifying code for their filings with the US Securities and Exchange Commission, or SEC. And this is their IR's employer identification number, their tax ID. Here is their principal executive office address, and you can reach them at this number if you need to. This little checkbox tells us if Blue Chip Capital Group Incorporated considers itself an emerging growth company. This is a classification for newer companies that get some relaxed reporting requirements. And yep, they have checked that box. They are indeed an emerging growth company. They're also indicating whether they'll be using a special rule that allows them to delay adopting new accounting standards. And they have not elected to use that extended transition period, meaning they will be keeping up with the latest financial reporting rules right away. Now we get to the juicy part, item 3.02, which is all about them selling stock that wasn't officially registered with the SEC. This often happens when companies are raising capital quickly, but it comes with its own set of rules and implications. So, going back to February 2025, the company had issued a convertible note. Think of a convertible note as a loan that can later be turned into stock. This loan was for $300,000, but $250,000 of it was being held, sort of like in a safe deposit box until certain conditions were met. Once those conditions were met, the investor got their $250,000 back, and in exchange, Blue Chip Capital Group Incorporated gave them 1 million shares of their common stock in March, and then another 1 million shares in April. That's a total of 2 million shares issued to this one investor over those 2 months. Then, from April to early September of 2025, they issued another 3,620,000 shares. This was tied to 6 more convertible notes, totaling $485,000 in loans. These particular notes come with a 10% annual interest rate. They can be converted into stock at a price of 50 cents per share, and they are due in 9 months. This means the company might have to pay back these loans or issue even more stock if the conversion price is attractive to investors. These sales were made under a specific rule. Rule 506B of Regulation D, which allows companies to sell securities to a limited number of investors without having to go through the full registration process. This is a common way for smaller companies to raise money, and it doesn't stop there. From March to September, they also issued a whopping 4,260,000 shares of common stock to their own officers, key employees, and other people who provide services to the company. These shares were issued using another exemption, Section 4A2 of the Securities Act of 1933, which generally applies to transactions not involving a public offering. This is typically for insider transactions or private placements. This report was dated the 9th of October 2025, signed on behalf of Blue Chip Capital Group Incorporated, and here is the signature. The name of the person signing is James C. DePrima, and he's the Chief Executive Officer of the company. So what does all this mean? In a nutshell, Blue Chip Capital Group Incorporated has been busy issuing a lot of new shares. We're talking millions of shares given out to private investors and company insiders. While this is a common way for companies to raise money or compensate employees, a significant increase in the number of outstanding shares can affect the value of existing shares if the company's overall value doesn't grow proportionally. It's like cutting a pizza into more slices. Your slice of the pizza gets smaller. Looking at the convertible notes, the 10% interest is standard, but the 50-cent conversion price is a key detail. If the company's stock price goes above 50 cents, those note holders will be very incentivized to convert their debt into equity. This could dilute existing shareholders' ownership even further. The fact that they're issuing so many shares to officers and employees also tells us something about their strategy. They might be trying to use stock as a way to attract and retain talent in a competitive market, or perhaps to conserve cash by paying for services with equity instead of money. Now for our outlook on Blue Chip Capital Group Incorporated. The company is using methods commonly seen in earlier stage companies to raise capital and manage expenses. The rapid issuance of unregistered securities signifies a period of active fundraising and potentially aggressive growth strategies. However, it also presents the risk of significant share dilution for existing shareholders. If the company doesn't see a corresponding increase in value or profitability, the earnings per share could decrease, making the stock less attractive. A notable risk here is the potential for a large number of shares to hit the market if these convertible notes are exercised, especially if the stock price is trading above the 50-cent conversion threshold. Investors should watch closely to see if the company can generate enough revenue and profit to justify the increased number of shares. The opportunity for the company lies in successfully leveraging this new capital to drive growth and achieve its strategic objectives. The current direction seems focused on rapid expansion and incentivizing key personnel, but the long-term sustainability will depend on their ability to monetize these efforts effectively. In conclusion, Blue Chip Capital Group Incorporated is actively navigating its growth phase by issuing a substantial amount of stock. While this is a sign of activity and ambition, shareholders should be aware of the potential for dilution and monitor the company's performance closely to ensure that this expansion translates into real value. Alright, that is our breakdown of Blue Chip Capital Group Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. And don't forget to check out the Discord community linked in the description to keep the conversation going. Thanks for watching, see you next time.